there's three really important key ingredients that you must have to be successful at trading, and I call this the map, the massive action plan, the map. You've got to have one of those, but the three main components of MAP are the mechanics. You have to have a system that works. It's not going to work 100% of the time, so you can forget that. No system does, but as long as it works the majority of the time, and if you treat your trading as a business, as I always suggest to students, that you have turnover, expenses and profit. The expenses of any losses you make. Really, you don't have that many expenses of the business. Some spread that you have to pay the broker. You have the cost of Wi-Fi and a laptop, and most people have those anyway, so it's not like you have to go out and buy a laptop. Most people have got those, or a Mac, and they've got a Wi-Fi anyway. So really you're just talking about the spread in there, and the expenses being any losses that you have when you trade. So the turnover is clearly what you make, that the expenses are any small losses that you make, and if you operate your system correctly, then you should keep those losses to a minimum with tight stops in place, and always looking for high reward trades for a small amount of risk. So I would suggest 3 to 1 absolute minimum. So then if you do get 2 trades that go against you, then the third one should make up the previous 2 that perhaps you have lost on. So the massive action plan, the map, the 3 components are mechanics, being the system. Action, you must take action. That's the A. You must take action. And also the P, being the psychology. If your mind's not right, then nothing else will be. And if you've ever come across Tony Robbins, I think he's absolutely right when he says that psychology is 80% and mechanics is 20%. You have to have the right system. Mechanics is important, but if you've not got the psychology right, then it's always going to be an uphill battle. And if you've seen one of my videos on trading without ego, then you'll know exactly what I mean, where you have to trade in the zone. You have to be totally in the zone. Now this particular trade, I mean, we're doing at the moment, just going to demonstrate that, how I operate those 3 components. So the mechanics, taking action, and the psychology. So the psychology is not just the way you trade in your own mental state, removing any emotion and detaching from that, but I'm talking about also the psychology in the financial markets. So what we have at the moment is the BREXIT situation, with Britain leaving the EU. It's caused a lot of volatility in the markets, and so we know that the markets are selling off, so we're looking for opportunities to take advantage of that. Now, we should never apologise for taking advantage of a falling market, because eventually it will start to turn and go back up. But what makes sense? To only make money when the market goes up, or to be able to make money whether the market goes up, down or sideways. Okay, the smart person makes money always. Okay, the person that still has old world thinking will only make money if they buy shares and the value of those shares go up. If they fall, they'll lose money, or they'll lose if they do sell those shares at a lower price. Okay, so we make money whether it goes up, down or sideways, but the psychology behind that is always about greed and fear, and we know where there's greed, the markets will go up, and when there's fear, the markets will sell off. So we're in a fear phase at the moment, where the markets have been selling off because it's perceived that by Britain leaving the European Union, that spells bad news, all round. So we know that sterling is absolutely plummeted against the dollar. Okay, so people would have taken advantage of that, and we know that the financial markets, the stock market, has fallen. So if you are trading indices such as the FTSE 100, Wall Street, the DAX, etc., then you would have done very well had you been short selling. So here is how the mechanics side of this works. So the DAX has been in a huge sell phase as a consequence of the EU referendum result, and you can see from up here where it found its resistance before the results came out at 10,435, and as soon as the results came through, that's when it started to sell off. Okay, so you can see very clear picture of the DAX in a very strong downtrend. I mean, there's just a landslide from where it's just fallen so much. Okay, so you're going to get a rally, or you always will. You're going to get a bounce during downward trends, and this is a prime example of one of them. So you had that one on Friday, that green candle there, after the big sell-off overnight, and then again in the early session of this morning, being the 27th of June, you saw that the DAX rallied and then went up to about 10,588-ish there, and then it started to sell off again. Okay, so here is an example. So we know that the market is fearful. Okay, so we're looking for a selling opportunity. So here's one. The market in the early session was going up, so you could have actually bought it and took advantage of that, as it just did go up at from 7 o'clock when the DAX opens. When I sort of say 7 o'clock, that's 8 o'clock German time, 7 o'clock UK time. So the DAX goes up, and then at 8:30 you can see that high test candle there, which was about about 9590, and then it starts to sell off again. And so at this point here, you can see this 918 candle, which is on the 3-minute time frame. It crossed through here, and then it started to sell off. It did have a rally, it touches the black line there, and then it continues to sell off. Okay, so where's the opportunity, the mechanics side of things? Well, if you adopt the income optimizer system, okay, the opportunity is just here at 9488. See, the sell is there. It did actually come down, bounced back up to black line here, and then it's continued to sell off and continue to sell off and sell off and sell off until it's come all the way down to support 3, so down to 9223. Okay, so that's fallen by over a couple of hundred pips down to support 3 there. So just by selling and understanding the mechanics and having the right system, and you have to take action. This is the A, the action as well, because you can have the mechanics. Psychology is everything, whether it's the state of your own mind or the psychology in the markets, greed and fear, but you've got to take action. You can't just watch and just see the momentum and the price action happening. You have to get in. You have to get in on the trade. You have to make the trade. You can't be fearful. You have to make the trade, otherwise you'll miss it. So as it crosses through here on the 3-minute, the sell's there, the sell's at 9488. Okay, so open level, sell 9488, only a small amount, only £2 per point, because you can, with these kind of markets the way that they are at the moment, you can put on small trades, and that will allow you a lot of wriggle room if you do need to put the stop in a higher place, and I'll show you where that stop is shortly. So 9488 was the selling point, which is there. Okay, so you can see the mechanics, why it's crossed through. I stay in the trade because it stays below the black line all the way down there. I don't get out here, even though it's crossed back over, because it's still in a strong downtrend. Okay, so this is the 3 minutes, and 9488 is a sell point, and I still have this trade open. Okay, so in terms of the stop, I'll just show you where that is. So you can see it clearly here, that was the entry point, 9488, and the stop is above this candle here. So at 9501 was the high of the candle, but just to give it a bit more room, 9505. Okay, so that's where the stop is. So the risk on this is about 17 pips here. Okay, 17 pips. So you can see from the sell there, even where it did rally at this point here, it still didn't get to the point where I would be stopped out. So it stayed below the black line and it continued. But notice how it tests it. That's my flipper strategy. Actually, you could have had it sold again off there. That's my flipper strategy. But here's the bread and butter DAX income optimizer system, where we're selling through here and we're riding all that momentum down. Okay, so the risk there, okay, from 9488 was about 20 pips. Okay, 20 pips of risk there. Okay, now what's the reward? Well, the reward is, at the moment, let's have a look how many pips this is. Okay, so 200 pips at the moment that it's moved by. So that is a reward of 10 to 1. Okay, so 20 pips risk of loss. Now, of course, I didn't know that it was going to continue to fall by a couple of hundred pips, but of course, because it has, then the return for the risk that I've taken is 200 pips. The risk is 20 pips, so that's a result of 10 to 1 there. Okay, and that's the great thing about trading, is that you do have a particular target point, but with a system you stay in the system, and this, with the DAX income optimizer system that I created, you stay within the system. Even though you have certain targets for it to hit, you still have the autonomy, if the price still stays within a sell zone, to stay in that trade. So you can have different targets as long as you don't move, as long as you stay in the trade and you don't try and second guess. So suddenly, if there was a rally and the price did move back up, then of course you can then close the trade down at any point. But in this case, the momentum was still strong, it was still moving down, and so I've just milked it and taken advantage of that fall. Okay, so from here, 9488 continues to keep falling, and at the moment the price is 9271. Okay, it did get down as low as 9223. Okay, so the question is, do I take the money now? Okay, because it is actually in this, it's crossed this this line here. Well, if you actually look at the 5-minute time frame, what it did do is, this is another opportunity where you could have sold on the 5 minutes here. Okay, with a stop up here, okay, and then just stayed all the way down. At no point has it gone above the black line, has it? Okay, little test there, and it continues to fall. Alright, so little test there, high test candle, so that keeps me in the trade there, still in the sell zone on the 5 minutes. It has crossed over on the 3 minutes, but because of the way that the price has actually moved so quickly, then the close on this particular trade, if it does cross up above 9296. Okay, so we've got plenty of wriggle room at the moment, so who knows, it could come back down to support 3. The most important thing is that it's over 200 points or 200 pips to the good. So that's the mechanics side. The psychology side is I'm in total control. I've taken advantage of fear in the market, but I've also kept a very, very disciplined approach to it, completely calm, and know exactly what I'm going to do next. From start to finish, from entering the trade, from initial target point, from initial stop, all the way through, maintaining that control. That's the psychology. And of course, very importantly, action. So MAP, mechanics, A, action, P, psychology. You have those in your trading. Those are the three components that are required. Okay, so hope you enjoyed this video. I will still be in the trade at the moment. It does stand at the moment from still 200 pips to the good there. Okay, from sell at 9488 and current level is 9282. Okay, so look out for the next videos. Hope you enjoyed this, and I'll speak to you again.